All right, so for the second part of it, I'm just going to take up from where we finished this session. I was talking about this higher high over here and the move that happened from this low that finished off here. I pulled my fib from there, the high, to the low. And I told you the area that we actually finished. And it's always consistent, 1.272, 1.414, 1.618. Always consistent. Now, we know where the break of market structure happened, and it was here. We broke through here. What was the highest point above that area that broke through, that came down? That highest point is going to be our next higher high. This area is going to be our next higher high. Now, if I pull my fib from this high low to this high high, do I have a complete retracement or a correction, guys? In the chat box, please. Let's do it quick, 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 quick. Do I have a complete retracement or a correction? You can clearly see we went below the 50%, 61. We're between the 50% and then the 61.8. Now I can label that area as my new high low. Now that I've identified that area, the higher high, I'm going to take those wicks right there and mark it to the closest body, which is there, which means the break of structure happened with this candlestick right here. And what was the highest point before the retracement? There. This will be my next higher high. See what is happening right here, guys. If I fib from this higher low to this higher high, now look at what that wick did. Do we have a full retracement there once again? Do we have a full retracement or not? This is where the problem is going to come. Guys, let's see you comment in the chat box. I'm working with you here. Okay, so some says yes, some says no. No, we don't. Yes. With the wick, about 59, yes. Okay. So guys, in terms of the fib retracement, whether it's a wick or it's a body, is a full retracement. And when we get to smart money, you will understand why. Once we get to smart money, you understand why some wicks are breaks, some wicks are not. So look at what this wick did right here. Now I'm going to remove this and show you a little secret. Look at what that wick did right here. Went below all this area. And what is here? I don't want to be talking about this yet, but it's coming up. What is right here? Well, I'd say liquidity, guys. I want that wick. I'm not talking about this black candle, so it will be the liquidity, right? And look at what the wick did. And when we pulled the fib, it was clearly 50% and above. I want to do again to make it clear to you. So we went 50% and almost to 61.8%. Because we cleared that liquidity with that wick, it is a full retracement and it was purposeful wick retracement. It was intentionally. So now this will become our high and low. From there now, look at how and look what happened in the market. We refused to create Because if I put a line here, once again, if I put line here to the box, have we created a new high or not, guys? Have we created a new high or not? Exactly. We refuse to create a new high. And from there, look, our new high and low, this is the zone right here. I'm going to change this into, let's use green. Our new high and low, that would be the zone. And this is where we had a full break of structure. The structure was already broken. But look at this, went out of the zone, and this will be our new lower low. In this case, we have broken out of this higher low, and this will be our new lower low. I'm going to show you something very serious, and you start thinking, how does this happen in this market? Now, if I pull my fib from this high, well, I refuse to label this area, but this area is going to be your lower high. This area will be your lower high. And the reason why it's lower high is because we did not go above the zone. It's within that zone. Now, if I put a fib from the lower high to this low, what do we have? My God. What do we have, guys? Thank you. And this is the structure of the market. Based on what I have shown you right now, do you agree with me that if you do not have a retracement, do not trade? Simple as that. And this is the style of the market. I want you to go and backtest for yourself, and you're going to see exactly what I'm talking about right here. It's going to blow your mind. Some of the trades that you took that did not go your way, go and backtest it, the area that you took the trade from, and you realize you took it off the wrong side. And since we had the new lower high, look what happened now. This was the break of structure. We broke below this area. And now if I fib it once again, I want to do it over and over and over. Look at that. Another retracement right there. This is your lower high, lower low area. And this again is your lower high area. You're making me smile. Oh, how happy I am because you're smiling. And that's the point. Many people struggles to understand what the market is really doing because they don't even know the structure of the market. Kiara, this is more detail what you are asking right now. Does this usually happen in a sequence of 5 weeks before the trend? I would ask you to go and then watch this. The question that you are asking about, go to Money Kinonic session and watch market geometry. He explains that the waves. Today, I want to touch base with you guys. I want to touch base with you. The most important thing is understanding the structure of the market. Does this happen with highly volatile pairs? I'll go on some of them and then you have a look for yourself. It's no different. You can't build a house without concrete. You can't build a house without some woods. You can't build a house without some roofings on it. Okay, so somebody's asking, do you always draw your fib from top to bottom? If I am dealing with a downtrend, I am going to pull my fib from top to bottom. If I'm dealing with an uptrend, I am going to pull my fib from bottom to the top. I'm going to repeat that. If I'm dealing with a downtrend, I am going to pull my fib from the top to the bottom. However, if I'm dealing in an uptrend, I am going to pull my fib from the bottom to the top. That's the difference. And I want to show you one more thing. One more thing before we leave. Look at this lower high that we identified, right? If I pull the fib right here, 50%, we have it perfect. Now I am going to reverse my fib from the lower low to that lower high. And look at the range that we finished. Did I create this, guys? Did I force this to happen? I don't know who is learning right here today. I don't know who is seeing the new future to the trading right here now. Can you pull it out further? Okay, so if I make it even enlarged right now, right? Let's look at it this way. I pull the fib from this low right here. Sorry. I pull the fib from this lower low to the current lower high. So this would be your 1 and this would be your 0. And look where price finished and reversed for the retracement. Between 1.272, 1.414, 1.618. Okay, so DIU talking about 78.6 level. As you can see on IC right there. Today, I want us to talk about, let's stick to market structure. We have 3 days to talk about smart money, don't worry. The rest of them will come together. With all these sessions in place, it will come together and it will blow your mind. April, are we good? Are we good to continue? Once again, yeah, if I pull my fib the same way from this lower low to this lower high, look where price reversed. 1.272, 1.414, 1.618, boom. Can you please explain the rules for the wicks again? Okay, the rules for the wicks. So if you look around this area, when it comes to structure and support, this is your support area right here. For that wick right here to this wick, look at how many times wicks are playing around that area. That is your support. The support is not a line. And I repeat, your support is not a line, it's a zone. So from the point that you are marking up your lower low or your higher low or whatever, the highest wick to the closest body close will be your zone for the support. And if I should stretch this zone, you will see how many times price has been playing around that area. And this is what we call support. It's not the lines that you draw, I'm sorry. Look at that. Look at that. Look, look. If I should stretch it even further, you're going to see some mad stuff. And for those on this code that do trade price trap, this is how Kofi does the traps. So for those that struggles to actually draw proper trap zones, this is the zones. If it breaks and you get the proper break, that's it, you're gone. You have your trade. I learned this from Kofi. He's my big boss when it comes to price trap, man. That man is crazy. He's just too good. Have we learned something right now, guys? Did something clicked? Okay, one more thing to blow your mind before I leave right here, before we finish today's session. Before we finish today's session, one more thing. I told you now from this low, if I can mark out my point and clone it, there is something significant that is going to happen. I told you from this low to the high. If I clone this to the higher high, look at that, guys. And look at the shape that I talked about. Prior to price reversing, you're not going to have a picture perfect. You're not going to have everything so clean and perfect. Head and shoulders is this. You need to be smart. You need to be able to see the market in a way that somebody else cannot see. Because if it's so easy for everybody to see, who would be working? Everybody will be rich. So nobody will be working for anybody. And look at that shape right there. And price reversed. One surprising thing about it, whenever the price is going to happen to reverse, the higher high, the last two higher high is always going to create a divergence. If you join the last two higher highs on your RSI, you're going to see the price dropping. I didn't create this. In the group chat today, I made mention of it. Getting your confirmations right to know that indeed, yeah, I have a harmonic pattern. Prices are D. What is the confirmation that you need to take the trade at D? What is your confirmation to take the trade at D? If you don't have your confirmation, then I'm sorry, leave the trade alone. Somebody says divergence, somebody says break of structure. What else? Trend line breaks as well. Wherever the divergence is happening, if you draw a trend line and it breaks, price will never return back. It will break. It will just drop. And now I'll show you some examples. One more time, yeah? Look around this area. If I should draw a line from here, from this high to this low, Look at how many times we've been touching that same area. Clone this, drop it to here. This is the proper clone. It's not here. This is the first lower high that you had. So this is the proper clone. Of course, price is moving away, but look at how many times it's touching the same area, touching the same trend. That is telling you that you have a proper structure of market. Now look, we're breaking out of that area. Would you be surprised to see a shape that goes like that again? This is pure market structure. I don't want to be talking about smart money today. Pure market structure, pure market shape, pure market geometry. And that is based on the fact that we are broken out of this area. We've broken out of that zone. If I stretch this, look at how price respected the zone. Came into that zone, this support area, came into that zone and dropped. I said this on the call that we had, I think on Monday or Tuesday. I did tell people that I don't want to see Euro USD go past this area. I want to see it just drop above here and sell off. I don't know if some of you were on the call that knows. Today, there was a news, Biden being the new president, and that's it. Price just dropped out there. It was completely bullish, and it just dropped out there. Pre-planned, based on market structure. So the news, the dates, and everything is planned. It's, oh my God. All right, so I'm going to leave room for questions now. I don't know. Let me take a picture of this screen, at least. If anybody wants it, at least they can make a reference to it. Thank you, Mr. OJ. I'm going to do that. And then now I'm just going to leave room for questions. Any questions, please feel free to unmute yourselves. Let's have some fun before we leave. Then I'll finish off today's session. I don't want to overload you. Is a workshop. I'm going to keep it simple, but very informative. Can you repeat what you said about the pin bar and engulfing candles? Look at the reversal areas. Look at that. Whenever we're going to have a reversal in a particular area, look at the candles that gets formed in those areas. Oh, it's the same type of candles. And it's because you have a proper or properly marked up the zones that I'm talking about. If you don't do it this way, it's going to form in a wrong way and you're gonna get it wrong. Okay, so FIP settings. Let's get the FIP settings out. And these are my settings, guys. Let me know if you've already taken a screenshot of it, of this part, and then I'll move to the feather low. And my colors are different for a reason. As time goes on in this workshop, you understand why some colors are red, some colors are black, some colors are purple. You'll understand all of that. and I have a green color as well. All of them has got different use to them. If you can take the next screenshot. Now, guys, are we good with the FIP settings? If we are, then yeah. Open floor for questions and answers, Q&A. Let's talk. Let's talk based on what you just seen. How do you know when the retracement is finished? How do I know when the retracement is finished? Okay. I'm gonna assume, okay, let me pick a different chart altogether. Let's pick around this area. Let's focus around this area, guys. Let's just pay attention to this area. How do I know if a retracement is finished? Now I have a high, I have a low. Let's label it once again. Pure price action, pure market structure, high. Low. If I pull my FIB, look at that. Do we have a break of structure or not? From this side, if I pull a line here, do we have a break of structure? Exactly. So if we do have a break of structure now, look at the retracement, 50% and above, same zones all the time. Same zones all the time. Now, I'm going to reverse this. But how do you know it won't reach 71.8? That is when you need this book. I'm trying to find it. I had it here. I had it somewhere. You need this book. If you don't have this book, please find it. This book is no joke. It will tell you, it will tell you exactly what you need to observe when price is about to reverse, what you need to see. It will show you everything. Guys, I still read this book. I still go over these books every single time. I need them. I need them as part of my trading strategy. You're not too big than this stuff. You're not too small for this stuff. Do you prefer the 4-hour candle over the 1 hour? Of course, the higher the time frame, the better the trade. And I repeat, the higher the time frame, the better the trade. You need that book for your confirmation. You need it. The book will let you know. Look at the candle type that formed over here. We went up to the wick, and look at how many times we had the wicks formation over this area. Now look at the zone. Look at that zone. Drop back to retest the zone, and we dropped. How far back can the price move, be steady before we can identify higher high? How far back? The highest you can see the price go is 100%. If we go past 100%, is a break of structure. Simple. It means the trend has changed. Just think about it this way. Look at this way. When the price was in an uptrend here, I'm drawing it the wrong way, sorry. When the price was in an uptrend here, When the price was in an uptrend here, look, when we broke below this area, you knew for a fact that we have broken it. Why? Because if you pull your fib from this low to the high, price has gone past 100%. If you want to even see it clearer, just switch to line chart and fib it from the line points. And look at that. Price has gone past 100%. In that case, it's a break of structure. It means the trend has changed. Now you look for something else. Look at the structures that we spoke about. Where I place my line exactly where it is, move back, retrace 50% and above, drop. Even if you want to play joke, of a trade, you know the structure, you have identified your structure, break of structure is here. Pick a retracement anywhere around 50%. I'm going to buy reasonably 0.01 and put my stop loss here. That's it. If you go past here, in a common trading strategy, if you go past that area, it's stop loss. That's it. You're out of the trade. If it goes well, your TP is going to be the next range within that area. You're looking to TP around 1.21, 272, 1.414. That area, if it goes right, that is your trade you have. In a layman term, you don't know nothing about trading. This should be your strategy. Just identify a trend, identify the break structure, take the retracement at 50%, put your stop loss at 100%. That's it. You go past 100%, you are out of the trade. If you go your way, you are making your TP straight away. How about that? That is the worst form of a trade that you can get. 1-to-1. You take the trade at 50%, your TP at 100%. That's it. Your stop loss at 100%. That's it. 1-to-1. That's it. Is that why harmonic patterns is key to stick to fib levels? Exactly why you need harmonic patterns. People think it's not reasonable to trade harmonics, but this fib patterns is what develops into harmonic patterns. And tomorrow we will go a lot deeper on exactly some of these things, and you understand why I treated this topic today. If you have time, go and practice what you have just learned today, and that will help you a lot when you come back on the session tomorrow. I'm going to try and get the recordings app ASAP, then people can go and watch it, practice, watch, practice, watch, practice. We have 4 minutes on the call, guys. Any more questions before I leave? Oh, you're welcome, Rebecca. Any more questions, guys? Worlds are changing. Worlds are changing day in and day out. And that is the business that we're in. Not for the money, not for how many times people can appreciate what we're doing, but for changing lives of other people. And that is the point of IM Academy. That is the point of AFA. We're here for you people. We need to make sure that you get value for the payments that you're making. It's like going to school and paying for tuition fee and not passing the exams. What's the point? That is the reason why we're putting in sessions every single day, AFA, for people to jump on the calls. Believe me, this 3 days, I'm going to make sure that after this 3 days, things are going to change. If you will take me serious, that's the only point I'll say. If you take me serious, then of course, you should finish this 3 days capable of marking up your own chart and taking your own trades. At the very worst, 1-to-1 trade, you know how to take it. That's me done, guys. I don't know if I still have April on the call. Maybe April wants to say something. Where's April? Yes, she's there. I don't know. I'm going to leave April for the rest of the 2 minutes if she's got anything to say.
No, don't leave me for the rest of the 2 minutes. But thank you, Francis. It's really appreciated. I can say on behalf of all of us, we really appreciate your time, your efforts. You're not